talk now to Marc Ostwald, who's the Chief Economist and Global Strategist at ADM Investor Services International. Good to see you again, Marc. Welcome back to the programme. So quite a lot of different things to look at here. Let's talk about imports, first of all, which showed a solid increase. What does that suggest about domestic demand in China and its current economic situation?
I don't think it actually tells us that much. You have to break down the imports to see where the strength is coming from. A lot of it's coming from front-loading of semiconductor imports, i.e. computer chips, to try and beat the trade tariffs which are being imposed. There was a lot of strength also in coal, which is related a lot to the very hot weather that there's been in China. So for power demand, there was quite a lot of strength actually in iron ore. Largely because margins have started to improve. But then you can look at crude imports, which are down at the lowest levels since 2022. To a certain extent, that may actually be a reflection of the fact that electric vehicles are getting an ever bigger share of the market. Therefore, vehicle demand for hydrocarbons is obviously that much lower. But there was a big boost also from base effects. So I don't think it really changes anyone's picture. It really just shows where the strength is in the tech sector in China, in renewables, while also pointing out that if you have a look at the steel exports, steel imports comparison year on year, it's so drastic. Exports up 21.8%, imports down 6.7%, and that really tells you the story of the construction sector.
We did see a big rise in imports from the US, though, didn't we? What does that say about the overall China-US state of trade relations?
Well, it is. There were big increases from the US, from Taiwan, from South Korea, and from Japan. Those are all the big semiconductor manufacturers. So I think it really doesn't tell us too much about US-China trade relations, other than the fact that there are tariffs coming, and there may be more if Mr. Trump is elected as president. So it really tells us mostly about the trade tensions there.
All right, well, let's switch to exports then, and growth in exports has slowed to a 3-month low in July. What does that mean, and how concerning could it be for the manufacturing sector?
It should be of some concern. I think it's more a reflection, not of trade tensions, but of weakening demand elsewhere. I mean, the weakness is quite broad-based, above all now to the EU and the USA. Even ASEAN was down quite sharply in Australia and even Japan. So, it is a reflection of weaker demand elsewhere, which had been anticipated. This has been anticipated for a long time. And actually, overall, exports are still holding up, relatively speaking, well. But in the second half of the year, I think it's going to be a rather bigger test, particularly as the base effects start to turn negative now, and therefore will be quite a headwind. So you could see export growth slowing to 2 to 3%. Mostly driven by base effects rather than reflecting a lot of weakness in external demand.
Marc, great to talk to you. Thanks, as always, for joining us. Marc Ostwald there from ADM Investor Services International.